Good evening, everyone, and welcome back to King B's Daily Podcast, where we talk about the RNSs from the day, a bit of interest about them, and what happened in the market. So TGP, 1% up on the day. They have completed their minority interest, which is 20% for £200,000. They had 80% back in 2019 for a nominal £2 in this company, and they made profit pre-tax of 101,000 and net assets of 276,000. So this business they have purchased seemed like a good piece of business for TGP. Next up, All. So 2 new licenses to explore. These licenses have had no modern exploration completed on them. They are 6.9 kilometres squared and 82 kilometres squared, respectively. And it shows the government support for increasing lithium in Ghana, 3% down on the day. Ondo. A brilliant reaction today, 36% up. Cracking work for holders there. Now, they have signed a master services contract with Nationwide, a Fortune 100 insurance company. They have selected LeakBot as a water damage prevention system, and they're working on a state launch in early 2024. Now, no other details were given, but I think it talks to 2024, so it sounds like a good contract for them. And again, it's all about sales. It sounds exciting for the company, and no wonder the share price is up today. Next, your pharma lovers, AGY. So they've had a phase 3 trial update. They're working on a highly statistical decrease, basically, in the combinations of symptoms compared to the placebo. So it sounds like the trial is going well. They're working on sort of a grass matter MPL, which sounds a really exciting little project. 94% down, all-time high. So it's one of those possible turnaround stocks. SP 15% up on the day, and they also talking about regulation authorities and bring it to market. So it's maybe a promising future there for the company. Next up, EST, 5% up on the day. They have talked about over 100 meters at 1% plus copper. Company has only sent 62 of 385 samples, because those 62 are above 1%. Now, it does say only in them, so I'm interested really in the debate around what were all the rest of the samples, what were their grades, why did they only choose 62 of those, and then we can get a bit more of an asset understanding about the JORC resource. Next up, FCM. So talking about sort of JORC resources and drilling. So 5% down the day for this one. They've talked about 18.8 GT, grams of ton of gold. So there's 0.3 meters. So I think it's not just about grade, it's also about the length of the grade. And it's something we need to really think about when we look at asset sizes and asset quality. Okay. However, if we go onto mining.com, which is a reputable source, okay, it talks about 30 GT being high grade and 5 GT being economically viable. So 18.8 is brilliant. It sounds a very good high grade, but again, it's in small quantities. However, they've had previous grades in July 2021 of 93.3. That is really high. If we're talking about 30 GT being a high grade, that is really high grade. But again, we need to talk about size as well. You know, it can't just be a nugget. We need to think about the size of this resource. So I think as it progresses, there's lithium there. There's lots of other things to be excited about for FCM. We need a bit more drilling and dig into it, but some really high grades there. So fair play to FCM. Looks a good overall resource, but again, we need to dig into the length of these intersects and what we can get moving forward. Next up, PPP, 113 BOPD average, and they're looking at an early December for workover rig moving forward. GWMO ended flat on the day. Now, it's talking about the mill construction nearing completion, which is great. Bit of it out of the company's control. They talk about with weather restrictions and different things. But to get to production, they need an environmental permit and they need a disturbance permit. Both have taken too long. There was a sort of 2-3 month delay. Then now that's elapsed. So they need to go and dig in and get those permits, or they can't do anything yet. So let's wait for that and then update the market and go from there. Next up, TM1. So it's an interesting business, this. It's part of the green energy revolution stuff, and we've talked about this in previous podcasts, and it might be an interesting one to look at. Basically, they recycle, recover, and reuse battery tech. Okay, and it's an up-and-coming company, it looks like, and they've provided something a bit unique. So they're 48% owned recycling business, okay, have received an order from Wayland's, but again, no figures. I really like figures in RNSs. Figures, money, length of contract, all these things are good. I wish companies put them more into RNSs. Next up, COD, okay, KOD. They've had a 40% increase in spodumene, 31.9 MT, metric tons now in terms of resource, and they're averaging about 1.06% lithium. Okay, that's not earth-shattering lithium, but it's all about the quality of the resource and the size, and a 40% increase you cannot sniff at. It's brilliant. But when you break that down, that 40%, okay, it's over a whole asset size. There's some parts of the asset have gone up 236%. There are some that are unchanged, some that are up 9%. So in terms of general, okay, it's a really solid results bit there. And again, there's more drilling to be done. Only around 3,000 metres of drilling has been done. We need to get to DFS, we need 20,000, so on and so forth. Okay, so a lot more drilling to be done, but good start. Production end of 2024 they're talking about. Then a second RNS came out. And again, this is probably why KOD didn't react massively all round, because there's a 14.5 million injection of money, but then 3 billion shares issued. Okay, so it kind of probably cancelled each other out, but that's the funding subscription side of the RNS done. ANA, they've signed a drug supply agreement. And what I like about this is a 1.25 non-dilutive grant into this, which is brilliant. A randomised control trial is going on, which has been, again, funded by this. They've got a legal framework to protect all the IP as well. So it looks like a really good up-and-coming business again. One for those pharma lovers. And I know how much you like a profitable business. Next up, Prem. Okay, so new mill needs to be installed. It's a shutdown of operations while that's being done, which means they're not going to meet the November and December deadline. There's a 1.5 million penalty to CanMax, their offtake partner, per month of missing the work. And I'm going to dig into this in my next podcast. It's 20% down the day. It needs a deep dive. That comes next. Last up, GST. So 16% down the day. It spiked for a bit and then dropped to 16% down. Now, 850,000 linked to working on getting more customers signed up, okay, and getting work into the business for GS Money. So investors are right. It is a positive thing because they're going to push forward. And I talked about in a deep dive yesterday. We need to see revenues go up. And there was the caveat, which I talked about yesterday, which there's possible placing money, okay? So it did come, but it's for acquisitions, it sounds like, which I talked about previously in the podcast, which was the caveat. So look, again, it's now money in the business. You need to see that turn into spike in revenues now for the company, and then investors will be a lot happier. But it's one of those things, you've got to take the call yourself, decide on your risk factor for you. So that was a summary for today. If you liked what you heard and you want some real good, balanced, research-driven debate, the link is in our description where you can find the link to our group. Right, thanks everyone. Have a great evening and I'll see you tomorrow.